All right. Good morning. It is Monday, August 5th, 2024, and the market is seeing a crazy sell off. Started initially by the Japanese Nikkei and a couple other indices throughout the world. Let's see here, the Seeking Alpha article up on it. I'm going to find this article for you guys. So I cannot get my paper trading account to work. So I don't know what's up with that. TOS software for whatever reason it's not working. And I was just trading stocks in there in the live account, and it worked fine. And then I logged out in order to switch over to paper, and it wouldn't let me log in, and then I couldn't log back into the live side either. So I don't know what's up with that. I am here in my I'm just gonna say software. I can't actually take any trades here, so I'm just gonna be doing ghost trading throughout this. But we can see that the market is currently down on the S&P 500 just by itself, down 3.5%. Um, Massive volatility in the market today. You see that right there would actually been an awesome entry. This is just following the same standard old strategy that I use with the 9, 12, 26 crossover on a cyan switch. And that ripped from 51.84 all the way up to 51.95. Wow, these are like $10 rips. That's crazy. Just in 10 seconds, a $10 rip. 10 seconds for $10. That's gnarly. So this is definitely like if you have the stomach for this, but this is massive volatility. Oh, you don't believe you can see my screen here. There we go. There we go. Also, too, I don't know if you guys noticed, a little bit newer music. So finally got some. Actually, when I was offline for 9 months, I actually traded to this music every single day. So I was pretty stoked to find out that this artist actually allows you to stream and use their music in your content. I was pretty happy about that. I'm muted. Looks good on my side. Can you hear me now? Test, test, test. I see the volume on my side actually reading. Maybe refresh the page. This is a pretty textbook rip here. Following the same old strategy that I've been using for a good long time. And ES actually breaking above 5,200. Let's take a look and see what we got going on in the news reports today. So last week, let's jump over this week. So in the calendar today, we've got global composite PMI data. So that dropped at 645. That's where that rip was. And let's see, 54.3. Forecast is 55. Prior is 54.8. So the PMI final, composite PMI final, got it. In the United States, the S&P Global Composite PMI Output Index, which is a weighted average of the Manufacturing Output Index and the Services Business Activity Index, tracks business trends across both manufacturing and service sectors. The index is based on data collected from a representative panel of over 800 companies and follows variables such as sales, new orders, employment, inventories, and prices. A reading above 50 indicates expansion in business activity, while reading below 50 indicates contraction. How's the music volume for you? I've never used this music player before. Okay, so you refreshed and it worked. Okay, cool. Got a little chopped in oil. I'm sorry to hear that. Let me know how the volume is as well when I throw the music back on. Just let me know if it's all right. Looks like we may get some decline here, although the chart pattern says otherwise. The TTM indicates a downward move, perhaps a rejection off of 5210, but the chart suggests that we may actually get a rip back up. Now, I don't know if you guys saw, but there was a massive sell-off in Bitcoin as well this weekend on Sunday, along with the Nikkei and everything else. So I'm just going to jump over here, and we're going to look up Seeking Alpha. And let's see today's market drop. And there was definitely an article I was reading this morning. I'll see if I can find it, and we'll come back to it. Loudish? Okay. Is that a little better? You have $1 worth of Bitcoin. So this artist's name is called The High Society, and I personally love to trade to this music. So the chart pattern itself was actually correct over the TTM and did get a nice rip there. So entry would have been right here off of this 5207 marker. And getting a lot of clawback here in the market. You saw that even before the open here, we were actually hitting levels all the way down to 51.19. So this dropped all the way to 51.19, and we're all the way back at 52.19. So this has been a $100 move. That's insane. I've never seen moves like this in futures. It's been a $100 move since 5:30. So if you literally just bought right here at 5:30, 5:35 or so, and just held it, that'd have been a $100 future trade. That's insane money. I mean, just even one contract. What is that? $100 times 4? That's 400 ticks. I've never even seen numbers like that. Just one single contract alone was worth $5,000. So if you just bought at 5:30 and ran it to now. That's nuts. And this was something that I was guessing would be, like, I didn't know for sure, but I was guessing that it would do this today. Just the fact that it had dropped 4% or so in the pre-market. Getting some rejection there off of 52.25, 52.20 area. Still looks bullish though. Again, we're watching the ES on the 10-second chart. Taking a look at this on the 1-minute chart though. The 1-minute chart, we are seeing that this is running into the volume weighted average price. Now this could see a rejection here, and if this does, I would expect to pull back all the way to like 51.85 or so. So looking at like potentially like a $30 pullback. We'll see what happens if this rejects it here. TTM does look very extended. A 30, a 29, a 30. I've never even seen these numbers on the TTM on futures. This is crazy. That's nuts, dude. Just since the open here, open had a pullback to 51.75 or so, and we've come up almost $50 off that. Yeah, pretty much close to $50 off the open. So We'll see what happens if we get this 5200 crossover here, but I'm looking for a pullback. I'd be looking for a pullback, maybe bounce off of the EMA 35 here, which is right there at 5190. But this is massive money. I would not want to trade this with a small account. Just as far as the moves are concerned, I mean, we're seeing this is like several dollars moves per second. Rejecting off the VWAP, like I said. Okay, I'd be looking for either a bounce here off the 9 EMA, but my guess is this will likely pull back to about this EMA 35 if we don't get this bounce here. Does look like we actually bounced a little bit off the EMA or the SMA 12. We'll see if that makes another run up towards VWAP. But this is looking more like a sell down to me. So I'm looking at 5190 and we're currently at 5205. We may find support right here, 5200, where we had some resistance and support line right there. But with the EMA or the TTM at 30, hitting 30, I've never even seen it hit those numbers. So that's pretty massive extension. 1, 2, 3 minute pullback. So this is going to be either the rip or the dip right here on this one. Looks like it might be the rip, but we'll see. It still needs to break over this like 5212 area. So that 8 SMA right there. Yeah, I mean, look at this. This is just in a couple seconds. It's moving $4, $5, $6. S&P may become untradeable soon. This kind of volatility. Average volume on the day about 7,700, 7,800 contracts. Dropping out a little bit of 7,600. Okay, so there's 5,200 there, 5,203. I'm looking for this pull at 5,200. I would be a buyer off of 5,200 here on long. 2, 3, 4. Nah, scratch that. My entry would be right here, 5190 off the EMA 35, like we mentioned. I believe that we may actually get this 5,200 crossover here, and if we do, I think we'll see another attempt at VWAP. 1, 2, 3. So this is that 3 minute pullback. It's pulled down to 51.98 and struggling to break up there, but it's trying. At this point, I would be looking for an entry, and I would be looking at the 10-second chart to validate my move. So on the 10-second side, I don't see an entry here for a long. And we've got the TTM hitting at negative 3.3, 3.4 or so. This looks like a downward move to me. And I say that because we've got the 26 crossing below the 50. The 35 is close to a downward cross. We do not have a cyan switch here yet. As far as the moving averages are concerned, 9 is below 12 and 12 is below 26. If we see these begin to swap here, then that's where an entry would look like. So for me, an entry on this would look about at 5205 or so. But that's just I would be looking more for these crossovers here. So there's an 8 SMA crossover to the downside. GTM at 3.2 now. And TTM on the 1 minute side is still cooling. Like I said, I'd be looking for a move down to this EMA 35 right here. So right now that's at 51.93. Doesn't look like we're going to get it because there's that 5,200 cross about to happen. So may still do a flash pull down and then a rip back up. GTM pulling back to 12 from 30. You can see a lot of bulls are trying to keep this thing propped up. Bears not having it. So there's a 5,200 cross here. I would be looking for my entry right here off this zone. So there's a decent entry there off 5,203 for a little scalp move. On the 10-second side, this is really where I'd be looking for my entry. And there's the 9 above 12. There's a cyan switch. This would be my entry right here. I'd be looking for an entry at 5,205. So that would have filled. And I'd be looking for my exit at 5,210. Looks like it might have been a false break. So this would have been a failure trade moment just because of that pullback. That pullback in and of itself, because of the distance of the move, that would have been enough to make me cancel the position. And then right there, you can see that it actually false break. And here's whoa. Oh my gosh. Yo, that was nuts. Pull back to 51.97 and then in 10 seconds, ripping up to 52.27. A $30 rip in 10 seconds. What in the actual hell? So that would have been my entry right there. I likely would have cut it on that drop just because that drop was like $8. But then look at this massive rip, $30. This is where you want to trade a big account. This is where those 250K accounts, those 300K accounts come into play. So this is where you want to have those types of accounts. So if you were jumping over to Apex or Elite, this is the type of accounts that you want to grab. So like Apex right now running 80% off. If you were grabbing for this is where I'd want to trade like a 250K account. They got 75, 100, 150, 250. So this is where I would want to trade that. Maybe even the 300. Depends on what your risk tolerance is, but you want that trail threshold to be massive for this. So Apex running 80% off right now. Link in the description if you want to grab one of those. And then looks like Elite is not running any sales at this particular point in time. But they are one of the best companies out there in my opinion. So links in the description on those. Good tunes. Glad you like it. Crossover's been fooling you lately. Sounds like an ad. Crossover's fooling you lately. Yet, this trade indicator. Yo, that is wild, man. Look at that. So 30 seconds going from 51.98, or sorry, 10 seconds, $30. 51.98 to 52.27, and then over the subsequent time frame, moving from 52.27 all the way up to 52.50. Just gnarly. Look at this. This is 10, 20, 30, 40, 50, 60, 70, 80, 90, 100, 110 seconds to add another $20 to that rip. So in 120 seconds, 2 minutes, this ripped over $50. I've just never seen this kind of volatility ever. I've been trading now for 4 years. 5 years, almost 5 years. I've been trading since the end of 2019. I've been trading. I've never ever in that 5-year span seen this level of volatility. This is crazy. All right, so I'd be looking for a pullback here to the volume weighted average price, 52.30, and the 9 EMA is almost at the same area, same realm. This is the player's market right here. This is the billions of dollars being traded back and forth. I mean, look at that. That was 12,000 contracts or so flooding in there right at 7 o'clock for $30 rip. Just insanity. So 7 o'clock reports that we had the ISM service business activity, the ISM services and employment. I'm gonna stop saying ISM. Services new orders, services PMI, and services prices. So let's see. What I'm most interested in here is employment. Hopefully it's a real employment gauge instead of one of those random ones where it's like, we saw 5 million new jobs posted in the last 35 seconds, so the economy must be doing great. But hopefully this one's an actual real report that actually has real bearing on the economy. So the non-manufacturing ISM report on business is based on data compiled from purchasing and supply executives nationwide. Okay, so it's real numbers. That's actually good. So survey responses reflect the change, if any, in the current month compared to the previous month. So this is measuring actual data, not one of those silly ones where it's like, we saw 4 million job postings in the last 5 seconds, or like we're projecting $2 billion in sales in the next month. This is a real report based off of real data with like hard data. So it's comparing the previous month to the current month. Okay. So for each of the indicators measured, business activity, new orders, backlog of orders, new export of orders, inventory change, inventory sentiment, imports, prices, employment, and supplier deliveries, this report shows the percentage reporting each response and the diffusion index. An index reading above 50% indicates that the non-manufacturing economy in that index is generally expanding. Below 50% indicates that it's generally declining. Orders to the service producers make up about 90% of the United States economy. So the orders here in the ISM services thing indicates about 90% of the United States economy. That's a massive amount. So this is actually a favorable report on employment. 51.1 versus the forecast of 46.5 and the prior of 46.1. And if we take a look at the previous months here, we've been sort of flat and actually a little below 50, or like right at 50. So December we're at 50.7, then 43.3, then 50.50, 48, 48.50, 49, 47.20, 49, and 46.50. So we've been trending below 50 since December. So for the last 6 months, 7 months, I guess 8 months. And so this is one of the most favorable ones that's come out since. And then we had also PMI, which moved to 51.4. Forecast of 51, but prior at 48.8. So these are actually some favorable reports on the ISM side. New reports coming up at 8:30. We've got the Treasury bill auctions of 3 and 6 months, loan officer survey, and the Fed daily speech. I'm glad you didn't go short on that seat, Tiny. That would have sucked. So, getting some sell-off now off of that and dropping below the volume weighted average price. So here's our ISM report and $30+ move, and now we're pulling back to 52.20. CCM finally starting to cool off at a reasonable range now at 8. Seeing some of this volatility leave the market, along with some of the volume as well. Volume dropping now to about 5,800, which is a massive far cry from before when we were seeing close to 8,000 on average, and the nearly 12,000 contracts that piled in long to that rip right there. ES is still down heavily on the day at 2.9%, 3%, and hovering right around that zone. And I don't really foresee this having the ability to be able to have that reversal back to the upside and get into that positive territory. In order for that to happen, this is going to need to rip yet another $100 or so. Currently, ES is down $157 on the day, and that's an insane number. But but I mean, it was much worse because obviously it was down to 51.20 or so. So we take whatever this is, add another $100 to it. So it was down about $260 on the day at one point. So we may still see more pullback throughout the day, especially if we keep rejecting below the VWAP. But this did make quite the comeback of at least 1%, which is a lot of movement. So we'll see what happens right here. TTM now going down to 6. And this is what, a 1, 2, 3, 4. We're on the 5-minute pullback now. Making a bounce off that 26 moving average right there and test up towards VWAP. Let's see what happens. Jumping onto the hourly chart here, you can see the carnage a little bit more in depth with this big rip down right here. Now this, like I said, my screen's not up again. Very annoying. I'm gonna see if I can find that Seeking Alpha article because it was quite insightful. So taking a look at the hourly chart here, definitely very bearish on the hourly. Let's jump into the 15-minute chart. So I'll give us some understanding of how far away we are from switching back to bullish, and we're a long way. This is definitely very berry. It was like Costco smoothie. A very berry smoothie. 5-minute side. Looks like we got a rejection off of that off that 200 moving average there on the 5-minute. 5-minute getting a pullback on the TCM a little bit. I should say cooling rather at 40, which is still crazy high. Still below the 5-minute VWAP as well. Another 3 minutes on this one. So it's bouncing out the 5-minute 9 EMA, which is right there at 52.05, and it's going up 10 bucks since. I would definitely be trading micros if I had a smaller account with this, just because the movement is so huge. Or I'd be looking to take scalps on the ES with a very tight scalps. Of course, you could easily go for like 5-6 all day long here. Switching red on the 1-minute side on the TTM, going back to 52.09. Making a bounce off that, but it's looking more like a downward move here. In which case, I'm taking a move down to 51.90. Yeah, this is looking like a big downward move actually. So this just switched red on the TTM, but if you look at the moving average here, we have 9 below 12 on approach for a 9-12-26 crossover to the downside. I would be looking at potentially going short here. The part that makes me hesitant to go short is that number one, we're above 5,200. Number two, we're still above the 50 moving average. So that's the things that would indicate that I would be a little bit hesitant to go short. And you can see it's bouncing pretty heavily off the 50 moving average from 52.05 up to 52.12, but I still am thinking short on this. So if it pops up to the 9 EMA, from a ghost perspective, I'd be looking for an entry right here, right there, at about 52.15 to go short. So I'd be looking for a short here and a pullback to at least the EMA 35, so like a $5 move, like at least like 46. Might go for like 20 or so on a short, and there's some pullback there. This looks like it's gonna bounce now. Let's see, but red to yellow move on the TTM on the 1 minute side would look really good for a upward rip. Just insane volatility today, man. Moving on the 10-second side, we have 9, 12, 26 in upward momentum. Looks like this is going to get a push up to 52.20 again. So I would be looking to go long right here as a pullback to potentially 52.17. This would be my long entry right there. Now it could get chopped out and just have this drop down. I would compare this to the 1 minute chart, but that would be my long entry right there. And I'd be looking to get out at like 52.18, maybe 52.20, because it looks like 18 is the entry. On the 1 minute side, though, I don't have the confidence on that. And that really is because we're -8 here on the TTM with this downward cross. So from this perspective, I'd be looking for an entry long, potentially, off of the 50 moving average. And this would be based off of several indicators, though, not just that one indication. This looks like a very long setup for an ABCD pattern. So what I'd be looking for is a red-yellow move here. You can see that there is more buying going on than selling, just on the bullish bearish chart down there. And I would be looking for this 9, 12, 26 crossover to take this move up to the VWAP with an exit at 52.28. 52.29 probably. That's if I was going to ride the whole wave. I'm a little bit more conservative of a trader, so I think that I'd be looking to get out at 25 just because I'd be wanting to lock in profits. I'd be looking at long right here off of 52.17. But I would only be looking for that, like I said, after the red to yellow cross, or red to yellow on the TTM and the crossover. So will this get the pullback to the 50? That's what I would want to see. Only went to the 35. I'd want to see the 50 though. Like, I'd feel a lot more confident buying off that 50 than I would off the 35. And the reason for that is just because the 50 acts as support pretty regularly, especially when you have this 5200 cross. The 35 does act as support a lot of times, but it's usually in support of a move that's already in bullish form. The song is called The Path of the Jaguar by the High Society. I love trading to this music. This is by far like some of my favorite music to trade to. There's a link to their YouTube channel and their Spotify description or their Spotify channel as well in the description. All right, so there's that rip that I was looking for. like I said, my exit would be at 52.25, so it would have already been out from 52.17. So this right here might have clocked me out of the position. That drop if I had taken that entry right there. But if I had chose my entry wisely, perhaps right over here, my exit would have been at 25. So even though I said I think this would go to 29, the reason why I would try to take that profit at 25 is just in case this went to like 28.50, which it did. Yeah. All right, so now we've got 9 above 12, but no 12.26 crossover. So I don't have a lot of confidence in this move just yet. This did bounce off the 90 MA, so that looks good. So this has 30 seconds left in it. As a buyer, I would want to be looking at this at the close of this candle. So I'd be looking for this candle to close out to determine whether or not I would buy on this. If so, I'm looking at a rip through the VWAP. So that would be on a red to yellow flip here. You can see there are a lot of buyers here on the bulls bears. There's 1 second left in this 1 minute candle. So that ended with a green hammer. So I'd be entering here, would be my entry, off of about 23 to 25 zone. And I'd be looking for a move up to 29, maybe up to 30. So there's a red to yellow switch there, but there's no 12.26 cross, just a 9.26 cross. So that trade would have been a failure. Pretty big sell-off there, actually. I'm kind of glad that I'm not trading today. As much as I want to take advantage of these moves, like everyone else. But at the same time, like that was more than a $10 pullback on that. From 26, I mean, this pulled all the way down to 13. That's a $13 pullback, just a pullback. So that type of volatility, I mean, this level of volatility is crazy to me. I've never seen it be this crazy on the S&P. What's up, Juan? Fair value gap. Watch for the dump. You called it. So, Pawn, I'm not actually taking any trades today. Just ghost trading. Just the level of volatility in here, I just felt it was better to not purchase another evaluation. So I was considering that last week I got chopped up pretty bad with the market the way that it was. So I was looking at it like, okay, well, I already failed. I failed 2 PA accounts last week. Over the last 2 weeks, I failed 2 PA accounts and an evaluation. So definitely got messed up pretty bad in the market. And then I felt like this recession was, or how do I put it? I felt like this pullback that is happening in the market right now was going to continue. And I had actually called it out on the charts a couple days in advance that I was like, hey, you know what? We're likely going to get some pretty massive pullbacks, potentially all the way down to 5,000. And then we called out all the levels on the way down. Sure enough, that's what ended up happening. But I show up and trade pretty much either way, no matter what's happening with the market. But I saw this move started happening yesterday. I don't know, in the afternoon yesterday, and I saw Bitcoin sold off a massive amount of money yesterday. And so it's like, okay, well, I think we're walking into a pretty huge dip in the market. I did see that the Japanese Nikkei closed down. I hope I'm saying that right. Closed down 13% today. So it's that caused a bunch of other markets to drop pretty substantially as well. And yeah, it's I figured that this is what we'd be walking into today. So I checked the market at like 1:30 in the morning, and I was like, yeah, okay, definitely walking into a massive downturn in the market today. And that's here we are. So we're down over 3% in the market. And I think that we're going to continue to go down as well. So to me, this is looking pretty bearish. I can see this pulling back to the 200 moving average here. I don't know if we'll get down to our lows. It seems a little too low. But I was taking a look at the top 10 worst days in the Dow, and about 3 of them were in 2008, and they're all around 7%. So between 7 and 8%. I don't know that we'll see that kind of drop today. We're already down 3%. If this does drop like 7, 8% or whatever, then I will likely buy some S&P index funds in my portfolio, my investing portfolio. If we can, like, if this drops below 5,000 or so, all day, man, I'll buy some S&P funds. Try and take advantage of that low price. It's on sale at that point, Getting some bounce off the bottom of that Bollinger Band there at 52.01. Ripping all the way back up to 18 and now pulling back some. Getting some surge off that. I would not be a buyer here. I would be looking for these crossovers to take place and then be looking to buy and maybe get out at like 25, which has been a level of resistance several times. You can see right here it's at 24.75, so this whole zone 25 is a resistance zone. Big pullback right there. Again, guys, you tell me if the music's too loud. You're taking great trades in stupid combine, but not taking them in your funded. Sorry to hear that, man. Dude, I've done the exact same thing where I got like solid trades in my eval, but then my funded account is just getting wrecked. And that's a horrible place to be because those funded accounts are not cheap, man. Like once you get to actually pass them, get into them, you're looking at a $150 activation fee every single time. You're doing that 3 or 4 times, it adds up really fast. Big rejection off that 200 moving average. We'll see if this finds support at 5,200. I'm not confident in that. All right, so just jumping over to so you're up 500 in one combine, 550 in another, and only 245 you're funded. Hey, green is good though, man, especially on a day like today, man. I'd be focused on scalps today, personally. I know there's big, massive momentum, but jumping on to we gotta do this. Nah, one second. All right, I just want to throw this article up here on the page. So we got the Seeking Alpha recession around the corner. Markets are in panic mode. The stock market has fallen significantly since this person's last article. The S&P 500 is down 9%. NASDAQ 100 down 16%. The unemployment rate is rising rapidly, causing concern among investors and leading to predictions of a recession. Market sentiment has shifted dramatically with expectations of a 50 BPS rate. I don't know what BPS is, so I don't know, beats per second, whatever. Rate cut in September, and a general lack of confidence in the Fed's ability to control the situation. So this particular person here, I'm not sure if they're going to go into what actually caused the sell-off today. A lot of it had to do with Japan. It has not even been a month since this person's last article where he expressed his views on the interest rate issue, but he thinks an update is necessary after recent developments. Since strong sell article, the S&P 500 has fallen about 9% in 20 days, and the NASDAQ 100 index had about 16% in the same time frame. This person was expecting considerably more subdued second half than the first, but did not imagine such a crash in so little time. His worst expectation was a recession by the end of the year, maybe early 2025. But this summer session is highlighted other more negative scenarios. Now, me personally, I've been calling for the recession now for over a year, and it's been in a lot of the content that we put out through 2023, and I was saying about 2024, maybe 2025, but I was looking toward October of 2024. And one of the reasons why I chose October really just has to do with most of the crashes that have happened throughout American history have been in October. So I don't know what's up with that, but it's been pretty consistent. Obviously, there are other crashes, I'm well aware, but October is a consistent pattern. Unemployment rate may be out of control, in this person's opinion. A cut of at least 25 BPS was needed as early as July, basis points. That must be what it is. But that didn't happen. The market did not immediately react so negatively, but the rapid rise in unemployment rate is causing a lot of concern for investors. Now, one of the things that I'm seeing personally in regards to looming recession is that I keep track of a bunch of the foreclosures that are happening around the country, mainly foreclosures that are happening in big cities around the country. And one of the things that I'm seeing is a lot of pre-foreclosures starting to pop up all over the market. Now, this is likely due to people buying at those peak crazy highs in 2022, and even though some of those people got in with low interest rates, it doesn't necessarily mean that the price of what they're paying on a monthly basis is affordable. Now, one of the things that I find silly is how much emphasis the news or the media and even investors put on the interest rates and how they affect the price of housing. While that is an important and major factor, so is the price of the house. If you buy a house at $70,000 with an 8% interest rate, so what? Your payment is still super cheap. Now, if you buy a $700,000 house, or I should say like more like 700,000, kind of normal, like maybe a $900,000 house, and you're buying that at say 4.5% or 5%, you're still going to be paying more money at 4% on 900,000 than you will at 70,000 at 8%. And so it really comes down to, number one, the price of the house itself, as well as the interest rate. And what I'm seeing is that both seem to be causing this sort of storm in terms of creating foreclosures and pre-foreclosures. And that's what I'm seeing personally across a lot of the major cities, along with a lot of market corrections in terms of price. We're seeing price drops across the board, and house sales were like 4.14 million, which was the lowest that has been the case since 1978. Was the last time it was that low. This person believes unemployment rate may be out of control, and it's causing a lot of concern for investors. You can see these numbers are, down multiple percentages each and every month. So this is personally what I'm also saying. I'm not going to go through the whole article just because it is a little bit lengthy. Yeah, Pawn, you're still crushing it, homie. Rather all being funded. I made $10,000 today. Too bad. I'd rather it be 12. Of course. But I'm gonna be rooting for you, man, especially with a lot of the craziness. Um, yeah, there's gonna be a lot of those. With a lot of foreclosure coming out of the market, I actually believe that we'll see a lot of hedge funds step in and try and pick up those foreclosures. Personally, I know that if I had access to billions of dollars, I'd be doing the exact same thing. 2 years removed from people spending crazy prices on cars. Totally agree with this. With the average person charging, uh, changing cars every 2 years. People change cars every 2 years. What the hell? Those people are learning just how upside down in the vehicle they actually are. If okay, I'm just gonna say that I'm gonna put this right out here right now. Okay, if you change cars every 2 years, unless you're buying total junkers, if you change cars every 2 years and you're surprised that you're upside down, I got no sympathy for you. I got no, I got nothing for you, man. I'm sorry. What did you expect to happen? Cars are not an asset; they're depreciating. That they depreciate pretty much immediately. So if if you're swapping cars every 2 years, I'm sorry, if you get wrecked, that's on you. Like I don't know how to feel sympathy for you at that point. Um, I'll try. Should have known better. There's my sympathy. That's what you get. Um, so yep, yeah. I would definitely be piling into the real estate market here very shortly, especially if I had billions. Even just with what I have available, I'm gonna try and do the same. So let's take one last peek here at the market. Probably gonna jump off here soon. Seemingly holding relatively steady along the 5,200 marker. So this did end up pulling back to about 5190, like we talked about several times. Bounce support up 5190, bounce up there, and running into the 5220 area of resistance. This does look like this is in a good mode here, though, for an upward move. Still on a downward cross, but TTM flipping to the right side for long. 9 is still below 12, and 5,200 moving average on approach here. So this could see a nice big fat rip here very shortly. 5220 is going to be the line in the sand, though. TTM now at -1 on the 1 minute side. That bounced right there off that 200 moving average, right at 51.90. Called it. So TTM switching from -1 to 1.6. I personally wouldn't trust this on long just yet, even though you got that cyan switch after that period of consolidation. I'd be looking for a little bit more. I'd want to see a break above 25. I'd be a buyer right here at, yeah, I'd be a buyer right here. I'd take this long, and personally, I would look to ride this up to the VWAP, up at 28. So I jump long right here off about 15. 15. This could pull back a little bit more, but 9 is above 12. Pretty confident that 12.26 crossover is going to happen. I'd buy this off 52.15, go long, and I'd be looking to get out right before the VWAP at about 27, maybe 28. See if I'm right. Holding pretty steady around 15. Unless this dumps, I'm looking at this to rip to about 27, 28. Top of the Bollinger Band here, actually, so 24.75. There's the dump. So, false break. That's the risk you take, though. See a lot of sell orders piling in there. Really beating out on the buys. In hindsight, I guess that might have been a bear trap. But I guess that's why I try my best to always wait for the actual crossover to happen. So that would have been a cut for me. And now you're seeing the push back up, but I have less confidence in this now since that crossover never actually took place. There's the 9 above 26 now, so that brings back a little bit of confidence on long. I would have cut this along the way, though. I would have cut this at probably a 10 or 11, probably 11, just because it's a pretty big hit to take. But this is where I'd want to be trading like a 250K account, maybe 300. Yeah, the volatility is definitely back, Ed. You are not wrong. I've actually never seen this level of volatility in the S&P 500. I've seen volatility where it's like, you know, up to like $10, maybe $12. Thought that I was impressed. Now I'm seeing $30 moves in 30 seconds or less. TCM at 5.5 on red dot. So I wouldn't feel confident about that. You have this pretty long flag here. In any case. Alright, y'all. I'm gonna bail out and head on out. Yeah, getting out. Yeah, you have a good one too. Thanks so much, everyone, for showing up today. Hope you guys took a moment to like the video, subscribe, and ring the bell for notifications. Also, too, if you guys are looking to trade futures yourself, grab yourself a an evaluation. There is Lead Trader Funding and Apex links available down there, and both those are great companies for actually getting funded. On top of that, guys, you know, if you guys are trading in the futures market, you may as well use somebody else's money. So utilize a prop firm and you use somebody else's money rather than putting your own capital at risk. So, all right, y'all, I'm going to jump out. Peace. Thanks so much for showing up. We'll